is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back to the program. Let's get across the number of properties going to auction this weekend. According to REA PropTrack data, there'll be around 1,500 auctions over the weekend. That's a 24% increase on this time last year. In Sydney, 762 properties are expected to go under the hammer. In Melbourne, 128 auctions are scheduled for the weekend. That's down 41% year on year, thanks, of course, to the AFL Grand Final. In Brisbane, 134 auctions, down by 12% on last year's numbers. In Adelaide, 114 auctions. And in Canberra, 93 auctions, which is actually a 39% lift year on year. And turning to the most viewed properties going to auction this weekend, the winner, 86 Pigden Street, Carlton, North Victoria. The property is called El Nido and was shortlisted in the 2022 Victorian Architecture Awards. The price guide there, $2.1 to $2.3 million. Property punters have also got their eyes on properties in Western Sydney, 2 properties in Baulkham Hills and another in Quakers Hill, and also another in Abbotsbury, west of Sydney's Wetherill Park. And finally, to the most viewed property of the week on realestate.com, 1 Nyora Street in Malvern, East Victoria. The price guide for the property is $1.9 million. It's a 3-bedroom, 2-bathroom house. The median sale price of a house in Malvern East was around $2.275 million, so it may be considered a steal. Melbournians will have to tear themselves away from the Geelong versus Sydney AFL Grand Final to try and nab this one. And for more on the property market, Angus Moore, economist at REA Group, joins me now. Angus, pleasure to have you on the program. Thanks for joining us. Now, we know we've entered into spring. It's usually a good time for property, though we have interest rates in full focus right now and, of course, the footy finals. So how's this weekend looking?
Thanks so much for having me. Look, it's going to be a bit quieter weekend this weekend, which not a surprise. We've got a lot of public holidays at the moment, particularly down in Melbourne. Also got the AFL Grand Final, so scheduled auctions are pretty light in Melbourne and a bit lighter around the rest of the country than we'd normally expect to see in spring. But this is just going to be a blip. We'll start to see that ramp back up next weekend, and that's sitting against a trend of activity ramping up as we head into spring. Looking more broadly, we have started to see auction clearance rates come up a bit over recent weeks, certainly compared to where they were in July. They're still nowhere near where they were earlier in the year or spring last year, but they have come up a bit, which will come as good news for vendors as we head into the typical seasonal peak as we get into late spring.
What else are you watching in terms of trends? Because there's been a bit of a change since the pandemic in terms of units versus houses.
Yeah, absolutely right. We've started to see a bit of a change in the differences between units and houses. So when we look at prices nationally, the trend is, as is well discussed, clearly down. We're seeing prices fall in most parts of the country. Compared to peak in March, prices are off about 3.5%. Now, that's nationally, and we're seeing some differences across the country. Importantly, there's a couple trends that are continuing from COVID. So in particular, those around location. We're continuing to see regional areas do a bit better than capital cities. We're seeing some of the smaller capitals, so Brisbane and Adelaide, outperform Sydney and Melbourne. Sydney and Melbourne are both off sort of 4 to 5%, depending on which you're looking at from peak, compared to that sort of 2.5% nationally. And Adelaide only recorded its first fall in August, so it has held up quite a lot better than Sydney and Melbourne. Even within the cities, we're seeing a similar trend to what we did in COVID, which is that outer suburbs are performing better than the inner city. But as you mentioned, the thing that's really changed, and a thing that I think we'll see over the next 12 to 18 months, is that we're starting to see prices for units hold up a bit better than houses. So in August, prices for units were down 0.2%. For detached houses, they were down 0.4%. If we're looking compared to peak, prices for detached houses are down sort of 3.5%, whereas units are sort of 2.5%. These aren't big differences, but it is a big difference from what we saw during the pandemic, when houses just massively outstripped units. There's probably a couple of things driving that change, but a big part of it probably is the fact that houses grew really quickly across the pandemic, and so units just are very cheap by comparison.
Yeah, where are we seeing some of the demand? Where's some of the hot spots at the moment?
Yeah, it's a great question, particularly as we're heading into spring. It's time when a lot of buyers are jumping into the market. Some of my colleagues over at PropTrack ran the numbers, and you can jump over there and actually look at what you're seeing in your suburb. But I think there's a really interesting divergence in where buyers are looking for houses versus where they're looking for units at the moment. So when we look at houses, the most highly demanded suburbs tend to be in outer regions. Not uniformly, obviously there's a bit of variation across the cities, but one of the trends that shows up is it is outer suburbs. And that's consistent with what we saw in the pandemic, with people looking for more space. It's easier to find space in the outer suburbs. There's not a lot of detached houses in the inner city, for instance. And they're also more affordable if you're going further out. When we look at units, though, what we're actually seeing is that a lot of demand's in the inner city, and that's a bit of a change from the pandemic. Probably a couple things driving that. As we spoke about, relative affordability of units for people looking in the inner city may be more attractive to look for a unit now than for a house, and that's maybe a change from 12 months ago. But the other thing that I think we're seeing is that investors are probably coming back into inner city markets and looking for units in a way they really weren't through 2020 and 2021. Rents are growing very quickly in most parts of the country and certainly are in inner city areas. Rental markets are quite tight in inner city areas in a way that they very much weren't in 2020 and 2021. So I think we're probably seeing some demand from investors after many of them left during the pandemic.
What are you watching in terms? I mean, we've obviously got interest rates in focus at the moment. We've had higher interest rates, talk from the Fed, from the RBA. Are you expecting to see a drop-off in buyers going forward?
Yeah, it's a great question. Certainly interest rates are front of mind for everyone at the moment. They're key to the property market. They're certainly key for borrowers as, rising interest rates reduces your maximum borrowing capacity. We have, I think, already seen some of that impact. Buyer demand is off compared to where it was earlier in the year. It's not off a lot, but it is certainly not as strong as it was spring last year or February, March this year. But it's still stronger than it was in 2019. There's still a lot of motivated buyers. Many existing homeowners will be looking to upgrade on the back of big gains in equity that they've had over the past couple of years. So while interest rates are certainly having an impact on prices, we're still seeing quite a bit of demand in the market.
All right, one to watch. Angus Moore, appreciate your time. Thank you so much for joining us on the program.